All right, welcome back. We're still talking about estimated liabilities, but now we're talking about bonuses. A lot of companies pay bonuses, employees like them, but a lot of times the bonuses are based on net income or revenue, maybe targets within a particular department, and sometimes even individual performance. So it's hard to know how much we're going to pay out at the end of the year, but because of the matching principle, we need to book the expense in the same period that we book the revenue. So we are going to go ahead and estimate that bonus expense. And then at the end of the year, we'll true it up if we get it wrong, which we almost always will. We're not going to ever get it exactly right. All right, so in this case, Clippy Inc., we're paying out bonuses each January equal to 3% of the prior period's or the prior year's net income, okay? So we're going to go through the whole year. We're going to calculate net income for the year, and then in January, we'll pay it out for the prior year. So Clippy estimates their 2020 net income will be $250,000. So every month they're going to calculate their monthly bonus expense, okay? So monthly bonus expense will be our expected sales to 2.5 million times 0.03, because we're going to accrue at a rate of 3%. And then we're going to divide all that by 12 because we're going to book our bonus expense every month. So that's going to be $62.50 a month. And if I want to know what my annual expense is going to be, well, we'll get to that in a minute. Okay, so every month, January through December, we are going to debit bonus expense for $62.50. And we're going to credit bonus payable. So we have a liability on our books, and we'll clear that off as soon as we get it all paid. All right, so debit bonus expense $62.50, credit bonus payable $62.50, and we're going to do that every month. So then when we get to the end of the year, 12/31/2020, how much bonus expense do we, or how much bonus payable do we have accrued? And we have accrued the $62.50 times 12 months. So every month we debited bonus expense $6,250. We credited bonus expense or bonus payable $6,250. And at the end of the year, we have a bonus accrual of $75,000. All right, so Clippy, they end 2020 with net income of $2.4 million. So they're going to pay out 3% of that as bonuses. So we're going to calculate how much they're going to pay out, which is 2400000, 2.4 million times our 0.03. No need to divide by 12 this time because we're not booking monthly expense. This is going to be what we actually pay out related to the whole year. So we're going to pay out $72,000 to our employees for their bonuses related to the net income of 2020. So to pay our bonuses, we're going to debit bonus payable for $72,000, which is what we're actually going to pay, and we're going to credit cash for $72,000. All right, but now if I do a T account for my bonus payable, I had a credit for I'm not going to do a T account because it's too hard to do in Google Sheets. Okay, but we're going to do a credit of $75,000, and then we debited $72,000. And so we have left over in that account a credit of $3,000. All right, well, we don't want a credit left over because we don't owe anything else, right? We're not paying that $3,000 out. It's just going to go away forever. And so to make it go away, we're going to true up our bonuses account. We're going to debit bonus payable for $3,000. Now our bonus payable account, our liability account is zero. And in order to do that, we're going to credit bonuses expense. We're just going to reduce the expense by the $3,000. I spelled that wrong. Okay. And now our bonus expense is correct for the year, right? We had a debit of $75,000, a credit of $3,000. So our bonus expense is $7,200, and our bonus payable account is zero, which it should be because we have paid out all the bonus we're going to pay. All right, that concludes bonuses payable.